Welcome to Zugimpex. In this video tutorial I will present step-by-step guide about Switzerland and its taxation. Please press full screen so you can read the information provided in this video better.
Hello, I heard that Switzerland is beautiful, but extremely expensive. Why do they attract so many companies?
Most foreigners who open a company in Switzerland do this because of a few reasons. The excellent image of Swiss companies and products, the stable political environment where the population can ask for a referendum and reject a new law, the legal environment that allows activities not possible in other countries, and the opportunity to sell to Swiss customers who are willing to pay high prices for high quality, but often ask for local presence. All these companies benefit from the tax system, too.
So can you please give me an overview of the main taxes for companies and for individuals?
Of course, we also show you some interesting tax incentives, and mention some points for the planning from which you can benefit.
What are the main taxes for companies, and which tax offices are in charge?
There is the tax on income and capital, the federal withholding tax and the value-added tax. The tax on income and capital is administered by the cantonal tax office. The tax itself is deductible, so the official tax percentage is higher than the calculation of tax divided by the profit. Federal withholding tax and value-added tax are administered by departments of the Federal Tax Office, and they are rather tough in dealing with investors. For the tax on income and capital, we talk about the tax rates that are in place 2023. There is a federal tax and in addition a cantonal and municipal tax on corporate profits. Direct federal tax is 8.5% of income. Local tax depends on the canton and on the municipality. In the Canton Zug it is around 3.35%. This means, in the Canton Zug there is a 11.8% tax rate, and because the tax is deductible, it is 10.5% of the tax basis. There are exemptions and incentives, so the tax bases are different. Locally, there is a small capital tax too. Switzerland offers a business-friendly legal system and attractive tax conditions for international companies. Discover how to benefit from it. Book your free 20-minute consultation with a specialist from Zugimpex. Click on the link below. The second tax we look at is the federal withholding tax on interests and dividends. A company that distributes dividends must withhold 35% and pay it to the Federal Tax Administration as a prepayment. For this the manager is liable. If the shareholder is a Swiss resident, he declares the dividend in his tax declaration and deducts the amount already withheld. Or he requests a refund of the difference. If the shareholder is a foreign resident, no refund can be claimed unless Article 10 of a double tax treaty is applicable. Most double tax treaties of Switzerland with other countries define lower rates for federal withholding tax. The rates differ if the recipient is a corporation or an individual. To use a reduced rate or a relief, an application must be filed with the Federal Tax Administration in Bern, and this has to be approved in advance. Unfortunately, this is a quite bureaucratic procedure. If the recipient is a company in the EU, there is an alternative possibility. The federal withholding tax can be totally avoided using Article 15 of the Switzerland-EU Savings Agreement. With this agreement, Switzerland participates in the parent subsidiary directive of the EU. Here, an application and its approval is required, too. A practical way to save withholding tax is a foreign company with a branch in Switzerland. We will show this later. The third tax we look at is the value-added tax, VAT. With a standard rate of 8.1%, the system is similar to the VAT in the EU. There is no VAT on exports, and imports of services are subject to the reverse charge system. From 2024, the standard rate will be 8.1%.
I read that many foreign companies register a branch in Switzerland.
This is true. The formation is simple, because no extra capital is required. Branches of foreign companies are taxed similar to a corporation. But there is no withholding tax on a transfer from the branch to the main seat, because the transaction happens within the same legal entity. With the right setup, you can reduce or avoid Swiss withholding tax through international agreements. We'll show you how. Book your free 20-minute consultation with a specialist from Zugimpex. Click on the link below.
And what about partnerships?
Limited partnerships and private partnerships are tax transparent. The income of each owner is taxed individually, and each owner must submit a tax declaration. In addition, social charges are due for general partners and for limited partners.
Are there other legal forms to run a business?
There is a variety of possibilities, just to mention cooperatives and associations which often pay only 4.5% tax. However, we cannot deal with them in this video.
You are right.
Let us move on to the taxation of individuals. There is a progressive income tax rate on worldwide income and wealth. The tax rate for individuals is different in the cantons and municipalities. The tax base is reduced by interest rates, social charges, costs of education, professional expenses, costs of commuting to work and other. For dividends received, some cantons offer rebates of 30% on federal level and up to 50% on cantonal level. In addition, there is an inheritance tax, but in most cantons, there is an exemption for direct descendants. The wealth tax is not high, but Swiss residents need to show their worldwide wealth every year in their tax declaration. This is one of the main reasons why many foreigners never plan to move to Switzerland. Swiss nationals and permanent residents with residence permit C must submit every year a private tax declaration. Prepayment is requested.
Isn't this very difficult for foreigners?
When foreign employees, who have not yet a permanent residence permit C, work for a company in Switzerland, there is mandatory withholding tax on their employment income. The rate is quite favorable and the tax is administered by the employer. However, if the person has an additional taxable income or if the income is above a certain threshold, a personal tax declaration is additionally required.
What about the social security system in Switzerland?
Switzerland has a comprehensive social welfare system. There is a first pillar to secure basic needs like pension and unemployment. Contributions for the first pillar are calculated linear without upper limit, while the benefits are limited to a low amount. This is a high burden for those with higher incomes. Then there is a second pillar with an individual pension scheme. The social contributions for the first two pillars are mandatory for employees, entrepreneurs, and limited partners. The third pillar is a voluntary pension scheme. In addition, every resident or person who works in Switzerland is obliged to register for a private health insurance and to pay it from his income after tax. With an international structure, high contributions can be often reduced or avoided. Many international businesses choose Switzerland for its advantages, but the real value lies in how you structure things. Check out our video on how to register a company in Switzerland. Let Zugimpex help you build a setup that works for you.
Another question: what are the most important tax incentives for companies?
First, there is the participation exemption on dividends, if a company holds at least 10% of another company. In addition, it is possible to deduct a flat percentage of 5% of dividend income to offset administrative costs. There is also a tax exemption on capital gains if a participation of at least 10% is held 1 year or longer. For research and development and for patents, additional deductions of costs up to 50% are allowed. There are many additional tax incentives offered on a cantonal level, like short depreciation periods or the acceptance of certain costs as a flat percentage of sales. Finally, we need to mention that there are highly competent tax officers in the Canton Zug who are able to discuss complex situations in an international context.
Are there also tax incentives for individuals?
For private residents, capital gains from the sale of a company or of parts of a company are usually tax-free. In addition, there are restrictions to avoid misuse. The underlying activity shall not qualify as a professional activity. Additional regulations are defined with the terms transposition and indirect partial liquidation. But there are also many other incentives. Because of the tax competition, cantons try to attract specific target groups. Such incentives can be tax credits for qualified new residents for some of their expenses in the first years, short depreciation periods, or the acceptance of certain costs as a flat percentage of sales. For wealthy individuals, a flat tax is possible in some cantons, but the amounts are high. To summarize, Switzerland offers a lot of interesting opportunities, at the same time a stable political environment and low taxes. Thank you for watching this video. If you found it helpful, give us a like and subscribe. If you have questions or want support, Zugimpex is here for you. Click on the link below and you receive a free first consultation.